morning, everyone, and welcome to our webinar, Learn to Sell More Garage Policies. My name is Teresa Cochran, and I am your garage underwriter here at CID Insurance Programs. Nicole Larson is joining us today. She is a senior garage underwriter at Century Insurance Group. She will be our instructor, and she is my underwriter at the carrier level. And also joining us is Jacob Cole. He's the marketing coordinator here at CID, and he will be making sure everything runs smoothly behind the scenes for us. And here we listed some of the top garage opportunities that we've been seeing lately. So on the dealership side, we have your heavy truck, your RV, motorhome dealerships, new and used auto dealerships, consignment sales. And on the repair side, I am seeing a lot of the heavy truck repair as well. But the mobile auto repair is really big right now. Your body paint shops, your general auto maintenance and repair, motorcycle repair, as well as valet. A lot of restaurants are back open. People are going to them, full capacity. So valet has been a heavy hitter lately. And now I'm going to have Nicole go into the garage liability coverages.
Good morning, everyone. Thanks for joining us. I'm going to get started. As we move through the slides, a lot of this is related to the coverages that are afforded in the garage coverage form. There's also some differences that will be spelled out, as well as some exclusions that you can find in there. Our hope with this is that you can learn a little bit more about the garage coverage form and what it offers and how you might be better able and equipped to sell the product. It is a little bit more intense in that it's a GL and auto type product. So with that being said, we'll go ahead and get started. So this is just a slide about the difference between the CGL and the garage coverage form. The CGL offers bodily injury and property damage liability, whereas the garage form offers coverage for garage operations other than covered autos, and then garage operations for covered autos. So that's just a fancy word for saying you have premise and completed operations coverage, and then you have coverage for your autos. I did write down the definition for garage operations. So you'll find that this definition, it's kind of narrowing down the types of exposures we are looking to cover in the garage coverage form, whereas the GL coverage is more broad. This is more specific to these types of risks. So it just means the ownership, maintenance, or use of locations for garage business and that portion of the roads or other accesses that adjoin to these locations. Garage operations includes the ownership, maintenance, or use of the autos indicated in Section 1 of the coverage form under the covered autos. So then garage operations also includes all operations necessary or incidental to a garage business. So that's a nice throw-in. It might not be their normal day-to-day operations, but we do understand that there are incidental exposures that are associated with these risks. So that's kind of like a give me kind of thing. So that's nice to have in there. One of the key questions you want to ask when you're determining whether or not you're going to offer a garage product is there an auto exposure related to this risk? So is there care custody control? Is he an auto repair shop and he's taking these autos in and repairing them? If so, you're going to want to offer a garage quote, whereas on the GL side, there wouldn't be any coverage for the care custody control, so like the physical damage of the autos themselves. The garage coverage form is an all-in-one approach. It provides your liability coverage for premise and products, and it also provides liability coverage for autos. It can include a variety of physical damage coverages, and it accommodates the scheduling of autos used for personal, service, or commercial use. It also offers additional coverages. I will get into that more as the slides. We have quite a few, so I won't get into that yet, but they're coming, so just one second. For garage liability coverage, limits of insurance for covered autos liability is contemplated. Limits of insurance for bodily injury and property damage liability. You also have your aggregate, so just like GL, and then you have an aggregate for products and work you performed. So again, it mirrors very closely to the general liability form, and they have updated that in 2013, so it makes it a lot easier to get into the garage line. So just keeping that in mind. the next section we have for you are some of the exclusions that are included in the garage liability coverage. So it's very typical is expected or intended injury, contractual liability, work comp, property of others, so your care, custody, and control, your pollution liability, your leased autos, racing, and work you performed. One of the coverages that are offered in the garage coverage form / auto dealers coverage form is Garagekeepers Coverage, and that's just defined as the care, custody, control of non-owned autos. So this is going to be your customers' autos. This is going to be if you're a dealership and you're test driving a non-owned auto. So if you're thinking about buying that auto, you can have coverage under Garagekeepers if you were to cause, property damage or bodily injury during a test drive. So again, it's for the non-owned autos. It's not the inventory autos. There are two different types of Garagekeepers coverage, legal liability or direct primary. So the first option is legal liability, and it's written in a way that the insurer must be legally liable for the loss to the customer's auto while the insured is attending, servicing, repairing, parking, or storing it in the insured's garage operations. So there's kind of two schools of thought on that one. The first being is that, do you really want your insured to be paying for losses that they're not legally liable for? We're kind of the opinion that we don't want that. So say he has 6 losses and they're all not something that he's legally responsible for, that is going to affect his insurability going forward. So that's why a lot of the time we offer legal liability, so he's only responsible for the damage that he's caused. The second option is your direct primary. Basically, it increases the premium a little bit, but it also states that a loss will be considered without regard to the insured's legal liability. So it is the more broad coverage. However, you get into a situation where you have too many losses and it's very difficult to then find insurance coverage for the insured. So for legal liability coverage on Garagekeepers, these are the different coverages that are available. It's very similar to an auto policy. So the first being comprehensive coverage, and that covers loss from any cause except for the customer's auto's collision with another object and the customer's auto's overturn. As far as specified causes of loss, again, very similar to the auto type coverages that you may be accustomed to. It's only going to cover your fire, lightning, or explosion, your theft, and your mischief and vandalism. Collision is going to be the customer's collision with another object or the overturn. So comp is everything except for that, and then collision is the reciprocal of that. These are typical exclusions for the Garagekeepers coverage. So again, you're going to see contractual obligations, theft. So that just kind of depends on which coverage you're offering, your defective parts, your faulty work, and then there's additional exclusions that apply to basically tape decks like sound recording equipment, tapes, records, other sound reproducing devices, sound receiving equipment, radar detectors, and more. That's very typical, and that's the exclusions that you'll find in the ISO coverage forms. This is physical damage coverage. So this is going to be coverage for the insured's inventory. So if he is a dealer, this is going to provide loss or damage to the autos that are on his lot. Again, very similar to Garagekeepers, there's comprehensive coverage, which is going to cover any losses except for the covered auto's collision with another object or the covered auto's overturn. For physical damage, specified causes of loss, it's a little bit more broad. It's fire, lightning, or explosion, theft, windstorm, hail, earthquake, flood, mischief and vandalism, or the sinking, burning, collision, or derailment of any conveyance transporting the covered auto. I will point out, though, you want to make sure that you're checking in with your quote, your carrier that you're going with, some carriers do have specific exclusions. So just because these coverages are afforded in the ISO coverage form, you're going to want to make sure you check your quote to see if that company has built-in exclusions for, say, flood or earthquake. That can be very, it can vary by carrier to carrier. So again, just be cautious of that and make sure you're checking your quotes to see which of the perils may be excluded. For collision, again, it's very similar to the Garagekeepers. The covered auto's collision with another object or the covered auto's overturn. As far as physical damage coverage, the exclusions, again, very similar. The first is being nuclear hazard, war or military action. Any covered auto leased or rented to others unless rented to one of your customers while their auto is left with you for service or repair. Again, I will caution you, depending on your carrier and the quotes that have been offered, that coverage may not be available to you. So it is very important to review your quote to make sure that you're going to have that coverage. It's not always provided for the basically the renting of auto while it's in for care, custody, control. So you want to make sure you're checking that. The next being any covered auto while used in professional or organized racing or demolition contests or stunting activity, or while practicing for such contest or activity. I will also say there that it's going to depend on the company that you're placing your business with. You'll want to make sure that you're checking your exclusions. Some carriers have very wordy exclusions for racing, so you want to make sure that you understand the insured's operations and also the exclusions that are contained within the quotations that you're offering them. The next one is your expected profit, including loss of market value or resale value. So when they are adjusting a physical damage claim, they are only going to consider your investment in the auto. So if you pay $2,000 for this auto and you were expecting to sell it for, say, $3,500, the most we would be paying is the $2,000 because that's the investment in the auto. We wouldn't pay for the expected gain, so that retail value. So that's something to keep in mind. The next exclusion, loss to any covered auto displayed or stored at any location not shown in the declarations page for if the loss occurs more than 45 days after your use of the location begins. So that is important. You want to make sure that you're disclosing all of the locations that the insured is occupying. I know that sometimes autos are stored at temporary locations, and something we're seeing more and more recently is wholesalers, so auto wholesalers selling from dealer to dealer or from dealer to auction type risks, that they're leaving those autos at the auction. So you want to make sure you're being very cautious as far as the language that is contained within your quotes, and taking into consideration also this exclusion, because there might not be coverage for the autos that are stored at the auction. So you'll want to make sure, again, that you're asking the question to your insured where the autos are being stored. And we'll get into a little bit more how you can kind of ask those questions. So I won't go into too much of that here, but just know that that exclusion exists. The last one is false pretense. So a lot of the times when we get submissions in the door, we will have losses that are being presented as theft claims. However, they actually are under false pretense. So in the coverage form, it automatically excludes false pretense, which is someone causing you to voluntarily part with the auto by trick or scheme under false pretenses, or you're acquiring of an auto from a seller who did not have the legal title. So for example, number one, or bullet point number one, I would say how this happens is somebody goes out for a test drive when the auto is unaccompanied. So typically we want to see salespeople accompanying all customers and potential buyers on test drives. If that isn't happening and that customer drives off with the auto and doesn't return it, that's not a theft. That is false pretense. They voluntarily parted with the auto, and so that is excluded in the coverage form. So you want to be mindful of that. There is a buyback that is available, but it is subject to underwriting criteria, and that's why it's really important to get in a garage application, because it's going to ask you the questions that Teresa is going to need to be able to properly underwrite the risk and see if the risk is going to qualify for that buyback coverage. The second one is pretty self-explanatory, so I won't go into too much detail on that bullet point. For physical damage coverage, the limit of insurance, this kind of goes back to what we were talking about before. The most we will pay for loss to any one covered auto is the lesser of the actual cash value of the damaged or stolen property at the time of loss, or the cost of repairing or replacing the damaged or stolen property with the property of like kind and quality. Again, that's saying that we're not going to pay for the expected profit. It's going to be the actual cash value. There will be an adjustment made for depreciation and physical condition when determining the actual cash value in the event of a total loss. So that's something to keep in mind. If a repair or replacement results in a better than like kind or quality, we will not pay for the amount of the betterment. The last point to note on this section is that there is a 100% insured value coinsurance clause for this coverage. So where it's not on the Garagekeepers, it is still vital to ensure those limits to value for the total exposure. It is built into the coverage form for the dealer's physical damage, so the owned autos. I recently had this loss, and just to kind of give you an idea of how underinsured it was, they had several autos that were damaged in a hailstorm, and the limits were nowhere insured to where they needed to be. At the end of it all, the final payment was only 6% of the actual loss. So just like property, it is very important that you insure this coverage to value. Some carriers' applications will kind of give you some guiding hands as far as how you determine what kind of limit you're going to need. If that application in particular doesn't have it, you can always ask about how many autos do you have on average? How many do you have at max at any one time? What's the average value of any one auto? And then what's the max value of any one auto? When you multiply those out, it'll kind of give you an indication of where they will typically be inventory-wise. Again, this is going to be their acquisition cost values, not the retail values. And two, because of this clause that is in the coverage form, you want to be mindful that you're insuring it for the total exposure. There is no peak period type endorsement. It would be up to you guys to catch that. So like something that comes to mind are when tax returns come out, a lot of people will go and purchase autos during that time. So if you have an insured who increases their inventory during that time, you'll want to make sure that you're increasing your limit if you don't think it's sufficient at that point. I would prefer, in a perfect world, that the limits are insured for the total exposure, the whole annual period. So if not, you're going to want to make sure, again, that you're accounting for those peak periods. There are some additional coverages that are available on the garage section. So much like your GL policies, there's an option for personal and advertising injury, damage to premises rented to you, uninsured and underinsured motorists, so very typical of your auto products. And then personal injury protection, that's not afforded in every state. However, the states that require it, that coverage is available on the garage product. There's also an option for auto dealers E&O. There are 4 little subsets of coverage for that, and I kind of made a note of that The first one being title, errors, and omissions. The second is truth in lending. The third is federal odometer. And the fourth is agents, errors, and omissions. So that's for wrongful acts in the performance of your professional services as an insurance agent. That's not going to apply to every insured out there. That is only if they're providing insurance services in conjunction with their auto sales. And it's going to depend on a carrier-to-carrier basis what coverages, if at all, for auto dealers E&O they are willing to offer. Some carriers sub-limit it. Some carriers offer full limits. So it's important to be filling out the garage applications that's going to ask and show you kind of what they're offering. The next one being false pretense. So we talked about that earlier. That's separate from theft coverage. So if you want that buyback, it is available subject to underwriting criteria. And that is, again, why it's so important to get a garage application in there. There is a slide that's coming up. And so I'll get to talking about that more in a minute. But again, it's very important to get your garage application completed. The last one being MedPay. So very typical of a general liability and auto product. We offer a premise and location MedPay. We offer auto MedPay, and then there's also an option for combined coverage. So you're going to have both for locations, operations, and auto MedPay.
Nicole, would you mind going over the auto dealers E&O coverages once again, just repeating those four?
Yeah.
The four options. Thank you.
Yeah. So the first one was title, errors, and omissions. The second is truth in lending. The third is federal odometer, so not properly disclosing the actual odometer reading. And the last one is agents, errors, and omissions. So that's if they're acting as an insurance agent as well. Some of the key rating factors for this product are the garage form rating basis. So on garage policies, we're rating based on the number of people. And so it's very important to disclose all owners, employees, helpers, even people who do not drive, anyone who's furnished an auto for personal use. You're only going to do yourself and your insured a favor later on. There are site surveys that do apply to this coverage line. So if you're not including all the employees and owners up front, it's very likely that you may be hit with an additional premium midterm, which I know nobody loves. So as long as you can disclose the employees up front, regardless of whether or not they drive, that's going to help you. It's going to help Teresa. It's going to help with the proper pricing for the risk. For furnished drivers, that's persons who are regularly furnished into covered auto for personal use. So this is typically applies to your owners' spouses, and sales managers. So you'll want to know who is providing an auto for personal use. That is going to affect your rating units. There are also some companies who have a form that basically will tell you that there is no furnished coverage unless the people are listed on the endorsement. So when obtaining this information, it's very important to, again, their names, their role within the company, what kind of work they're performing, if they're full-time, part-time, and then their vehicle use. That is going to affect your pricing. It's going to affect your coverage. So it's very important to get that information up front. The last little bullet point here is your number of dealer plates. It is important. That is how we rate for our uninsured and underinsured motorist coverage. So you'll want to make sure you're obtaining the number of plates for that rating purpose. Things to be aware of when you're gathering the information. I would say that an accord form is probably not going to tell us or Teresa enough underwriting information about the risk. So we're not going to be able to provide an informed underwriting decision. You might be, hit with additional questions. And so it is important, if at all possible, to obtain any garage application. And so you might not know who Teresa is going to market it to, but Most garage carriers can use other companies' apps to kind of get a general feeling of whether or not that risk is going to meet their underwriting guidelines. So it's very important to have a garage application completed. It's going to make your quote have a quicker turnaround time. It's going to lead to less questions. You're going to have a more accurate quote. It is so important to get that garage application into Teresa. The next bullet point is if there's a target premium. I know sometimes that insureds don't like to give target premium information, but it's only going to help your insured in this case. So if you can tell Teresa they're looking for something around $2,500, if she has 5 garage markets, she's going to rate all of those carriers. And if she has some that are at $10K, $5K, she might not want to offer those quotes. If you can tell her, again, you need something around $2,500, here's your 2 quotes, this one might be a little bit more, but it offers more coverages, there's less exclusions. So it just helps her in knowing which markets to solicit and what kind of quotes might be offered. Also, motor vehicle reports. We do require motor vehicle reports on this class, this line of business. So it's important to know if any of the owners or employees have any accidents, violations, anything of that nature. And then, as I mentioned earlier, these risks are subject to site surveys. So it's important to disclose all of the information up front so you're not hit with an email asking a ton of questions and for clarification midterm. Some of the things that they're looking for on the surveys are slip, trip, and fall hazards. That includes your parking lots, sidewalks, and oil spills. So I would recommend telling your insured to get ready for these surveys. So they should be cleaning up their premise so that it's ready, nice and pristine for the inspector to come on site. Make sure their fire extinguishers are up to date, that their smoke detectors are working, that they have signs posted for no smoking, and that their flammables and soil rags are in UL approved metal containers or cabinets. Those are like typical things that are dinged on these site surveys / inspections. So just keeping those things in mind can help your insured have a more successful survey.
Nicole, we have one question that I just want to address really fast.
Yeah.
Do we have to submit ACORD forms? The only time I want to see an ACORD form for a garage risk is if you want property coverage. So your PPP, your business income, your building coverage. That's the only time I want to see an ACORD form. Otherwise, I would love a garage application because ACORD forms really don't do anything for me on the liability side.
Yeah, and I would agree with that. The only time I would want to see ACORD applications are when there's property coverage. Everything else, the garage application is so much more written, and the questions that are on there are going to help us a lot more with the underwriting process, the pricing process. So I would prefer not to see the ACORD applications, and it sounds like Teresa's kind of on the same page unless you're looking for that property coverage to be packaged with your garage product. So we have a couple more slides, and so I will turn it over to Teresa, and she can kind of wrap things up. So thank you guys for your time. I appreciate you attending, and Teresa, take it away.
So today we hope that you learned the different types of garage exposures, that you're trying to ensure what coverages each type of garage risk would need, and the importance of utilizing a garage application as a tool to gather the right information from your clients so that you and I can figure out what coverages they need and how to insure them properly. So again, thank you for joining us. We really appreciate it. Please visit us at our website, cidinsurance.com. My information is listed on this on this page as well as at cidinsurance.com. So feel free to reach out with any questions. Jacob will be sending out a survey, so you can let us know if you like this webinar, what other webinars you'd like us to host for you. And we look forward to doing business with you. Have a wonderful day. Thank you.